Hello everyone, this is Evan from the Trade Risk here on Wednesday, March 30th with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, individual names, and then I have a handful of trade ideas for us to look at the end of this video. Now we'll jump right into things here. S&P 500 closing up almost 0.5% today, following up yesterday's nice explosive sort of breakout bar, which followed Janet Yellen's comments yesterday. Now let's take a step back first before we get into some of the levels here. Last week, if you remember, actually 2 weeks ago, we ran right into this 205 level in the S&P 500 in the SPY ETF, and that was enough to sort of stall the market and push us sideways. Last week, we had this very sleepy sideways, low volume trading, which ended up turning into a bit of a pullback as we saw a break of some of those previous lows and a close on the lows last Wednesday. Thursday follow through to the downside, but you could see buyers stepped in and rallied us towards the highs of the day. It was very light volume last week. We were closed for Good Friday, so it was a holiday shortened week. We came in this week on Monday, digested more sideways, just held in there, flat, sleepy trading, low volume, awaiting comments from the Fed. And then finally, boom, we had our directional move, our expansion of volatility yesterday with the S&P 500 closing up 1%. And then once again, we saw follow through today. We're above 205. We're trading now in a range at levels that were just very messy, kind of chopping around for the past couple of years now. 208 I have loosely drawn on here. You can see it was a pivot high for a few different tests, acted as support in here, was pivot highs once again in 2014. Not a special level, but just something to key off of, a big round level that perhaps we can trade to, but certainly nothing says we have to stop there or that we have to get there. Markets continue to be in this bull trend. Breadth continues to be very supportive of this rally. And once again, we consolidated overbought conditions in here. We were, building up this uncertainty. We were pulling back. People may be thinking, well, it's time to roll over. It's time to retest 200. Go lower. Whatever the case is, the market continues to rally. It continues to turn the doubt into forced buyers if they're on the sidelines, then they have to chase this market higher, or if they're short sellers, they have to continue to roll up or cover their shorts. So market continues to trend higher. Not much has changed from a directional standpoint. We finally just saw a little bit of new commitment though after consolidation. I think everything so far has been healthy. Markets behaving very well technically, all things considered. Of course, again, we have today being the 30th month end. We have first quarter markup, which a lot of people are sort of attributing this past 2-day rally to. Maybe that's true on some level. I'm sure it is, but to say that it's only due to that, and that the market needs to come down or whatever the case is, I think is just not the right way to think about this. I think the trend's been up for a while. There's been a lot of sort of skepticism about it, and I think it's continuing to climb the wall of worry, and that's what you're seeing play out here. So for us, I mean, we did buying yesterday on this nice rally, looking for continuation. We did take some profits today, but we continue to remain long this market, rotating into outperforming names, and it has continued to work. It's been a great month for us over the course of March. And don't forget, we will have soon enough, the talks will pick up on earnings season, which is fast approaching. And, of course, markets are rallying into earnings season. Will make perhaps, continuation of those gains after they announce maybe more difficult. Maybe after earnings season, maybe we'll finally get that pullback. But again, it's all speculation. I'm not worried about that. I don't think about that. But for those of you who, are dying to short this market, maybe that's some sort of catalyst you have in the future. But again, just not something that I'm paying too much attention to. So all in all, I think the same song and dance continues. Grind higher, healthy action, be cautious, know your levels, but stick with the trend. If we look at the IWM, continue to have, this. I mean, look at this bar yesterday, just monster, bullish bar, blowing off the recent range here, getting back above this big prior zone area of what was support for the market, for the Russell, for the past several years. Looks very healthy. We couldn't quite hold in there, couldn't quite continue higher today. We closed flat here in the Russell. Maybe that's not ideal, but structurally holding up very well. Maybe it needs to move sideways here a little bit before it continues to push. We'll see what happens with it, but just keep an eye on, more or less this 108 level back below there. Then you can start to get a little more neutral cues. Similar situation yesterday. Great looking breakout bar to the new highs here above 108 level that I know we were talking about for quite some time. We were watching. Again, it couldn't quite continue on those gains today. You could see the fade here. Not necessarily the prettiest looking bar for the bulls. However, structurally, it's still holding up there, pent up. I'm not going to make too much of this. I still like this. I'm still long names in this sort of in this group here in this index. Again, you have this open gap here, which perhaps the Qs want to fill in the near term. We got right up there. It's essentially where we failed, right around 110. And this was the gap from the beginning of the year. We know that the S&P 500 already closed its kind of opening gap down to start the slide in January of 2016. But perhaps we have a date to fill this gap here in the Qs in the next week or so. We'll have to see how that all plays out. But that's essentially my read on the overall markets. If we start to look at some other markets here, we'll look at TLT first, which saw a bit of a fade here towards the end of the day, which was constructive for the bulls. This market gap lower, tried to push lower, but it did get saved a bit. Still closed down 1%. That's concerning, but so far this pattern is still intact. You have support down here at 127, break of this trend line. You got some resistance up here. Just continue to work. It's essentially one large consolidation pattern, perhaps just morphing into more of a sideways range. We'll have to see, but for now you have your levels. If you're long TLT, 127.50, that's what I'd be using as my exit point. Gold, this one struggles here today as well. Down 1.4%. You can see yesterday had a nice surge trying to reclaim this trend line. Ultimately could not continue that today. Keep an eye on 116. That'll be an important level. If it loses 116, these lows right here, would expect further washout. Silver at an interesting point as well. You can see putting in a lot of sideways consolidation, a lot of balance here right around this 1450 level. I don't think it's going to stay here much longer, and I would expect to see a pretty sharp move away from this level depending on which way it breaks. So keep a close eye on silver. You might get a directional trade setting up there, really in either direction. We'll have to see which way the market leans. USO, pretty ugly day for USO. Tried to push higher today, was looking real strong today. I know there's numbers out on oil this morning, and we were initially reacted positively. We were above $10, and then ultimately we closed on the lows of the day. That's not ideal. Granted, it's only 71 basis points to the downside, but still showing that it's not quite ready to sort of head back up higher into this range. Probably needs to retest this 960 level again. If it undercuts it, I think you need to be careful. UNG, we talked about this. I put a post out yesterday. This is one of my favorite setups right now. I like, UNG, I think is just the most, I think it's the most beaten up, certainly the most beaten up commodity of the year, I believe, and one of the most beaten up asset classes of the year of 2016 so far. So I like that it's snapping this downtrend line. It had this nice kind of trend higher here, tried to break down. In fact, we tried to play this breakdown right here on Wednesday, this last Wednesday right here, getting short, and you can see that just did not work out as it started to just gravitate higher again. So we're long this, we're long UNG, looking for higher prices here. Keep an eye on it. I like the pattern though, all things considered. Finally, let's just take a quick look at the dollar, which continued to slide today, coming back into this very, very important support level that's held for the past year or so. So keep an eye on the lows from today, 24.50 area. That's where you'd want to see hold if you're a dollar bull, and if you're playing commodities, obviously, and some of those sectors that are sensitive to the dollar, then keep an eye on this as well. Now, getting into some of the individual sectors, XLU still just performing, leading the pack as far as sectors go. Already this month up 6.5%. This week it's up a little less than 1% this week, but still this trend looks great. I'm still involved in this trade. We got long this around 45. We're still continuing to hold this right now, getting close to our next profit area on XLU, but you can see it's quickly approaching the all-time highs here back from last year, right around 49.72. Staples continue to act really well. You can see these are at all-time highs. Look at the monthly here, up 4.75%, clearing all-time highs, closing on the highs of the day. Just tremendous strength here in the staples. Semiconductors, we've mentioned them before. They continue to act well, up 1% today, holding the majority of their gains. They look good as well, coming into some prior resistance. Keep an eye on that. And then finally, discretionary, also doing pretty well today, up 64 basis points, technically behaving nice in this trend. And a lot of these sectors are participating on the upside here. These are just some of the standouts that have been in place for the past several weeks now. Going into some individual names, just a few of them, then let's get into trade ideas. Apple is the first one, which continued higher today. I know there were upgrades, and just saw some nice continuation off of yesterday's breakout bar. A couple of points here. Weekly chart, you can see this trend line. It's testing it right now, basically at it. So keep an eye on this. Let's see if it can break out above that. Also note the 61.8 golden ratio Fibonacci retracement from the highs here, from the swing high of December down to the swing low of 2016 February or January. You can see we're basically at the 618 right now, so a little bit of confluence, previous supply in here. Expect Apple to have some trouble right around 110. You get a round number. There's just a lot of things all lining up in this area right here. Keep an eye on it. But I mean, Apple so far looks good. This is one of my core long-term holds. Continue to be in it. In fact, I added to my long-term position yesterday. So again, long-term, not a trade for me. Google continues to act well. This is one that we are long. Of course, this fade a little bit ugly, but I still like structurally. We're holding yesterday's breakout. We did continue higher above it. I like it above 760. I think we can continue to work higher. Let's see if that does happen. Bit of a messy range here. There is supply. I mean, up to 780 or so, I think is a first logical target. And then really, I don't see much reason why we can't rally into earnings, get up to 790 or the all-time highs around 800. I think that's very possible here in Google. We're long the name. Amazon continues to surge higher. This one holding up pretty well. You can see, made this nice leg higher, sideways for a few weeks, and then it's continuing to break out higher. I like this. Another one of my core long-term holds that I added to. Did a lot of adding to some of these names of my investments, so to speak, just the other day. But for a trade, I'm not in it. Those are long-term investments. I still like this in Amazon. Twitter, also reclaiming a key level, 1580, 1575. I like that it's back above here, getting back above $16. You can see this was a level that the market held back here on January 20th. Again, tested it a bit here and held on the 3rd of February. Briefly broke below it, but now again worked itself sideways on it just the past few days. We're back above it. I think this is an important area. Twitter needs to move sideways, needs to consolidate before maybe it can make a run for the highs again. So keep an eye on that. Now, getting into some individual names, just keep an eye on all these setups. Do your due diligence on any earnings and any events like that. So these are just the technical setups I'm showing you, names that are getting ready to break out or have broken out. First is Bed Bath & Beyond. You can very clearly see what's going on here above $50. I do like it. GPI, this one breaking out today above this recent resistance, this base that it's been moving sideways in. See if we can get some more continuation there. That looks good. JCI clearing this sort of recent pullback here. I like it as long as it can hold above this $39 level, $38.50 rather. JCI looks pretty good to me. GCP, recent IPO. I just threw this on here. First time I've seen it come up on my radar, but making a new closing high today. Still a lot of indecisive candles here. You can see a lot of fades above this $20 level, but for those who like IPO recent names, keep an eye on this one. Looks like the trend wants to continue there. Just keep an eye on it. UA, Under Armour, I think this one was pretty noteworthy today. I like the pattern here, bumping up against 85, 65, 85, 75 or so. So keep an eye on this for continuation. Finally, McDonald's. We flagged this back here in early March, right around 119. We liked it above 119. You can see it move sideways, consolidated higher. Now you got sort of a second entry or an add point. If you took it here, you can add to it here. All-time highs for McDonald's. It is stretched, but it is working. So keep that on your radar. And that's it. That's what I have for today. As always, if you like the videos, do subscribe, bottom right-hand corner. And thank you for watching. I will catch you guys next time.